Meet Sami, a witty Venezuelan woman whose wallet is small, but whose dreams stretch as wide as the Caribbean Sea. Ever since her childhood visits to Mexico, she's felt at home there, basking in the shared rhythms of music, food, and laughter. But as an adult, her finances have been, let's say, less festive. One evening, her best friend Grendis drops by for a visit. Over a cozy spread of wine and arepas, Sami's adventurous friend leans in with a spark in her eye and says,
Have you ever thought about investing in Tulum? The rental returns are sizzling and wellness tourism is booming.
Sami is instantly intrigued. She dives into research and is stunned by what she finds. Tulum's real estate prices have been soaring, climbing over 10% annually in recent years. Fueled by these facts, she scrapes together her savings and books a flight to Tulum. Her heart races with a mix of excitement and nerves. This weekend, she'll be touring properties in paradise. But here's the big question. Is Mexican real estate really a smart investment in 2025? Let's find out. Why is everyone suddenly talking about Mexico? Well, it's not just the tacos and turquoise waters, though those help. It's the real estate market, and it's sizzling. Real estate investment in Mexico is projected to hit a jaw-dropping 652 billion pesos. That's $34 billion by 2025, with annual growth averaging 12.5%. And the total market value? A staggering $5.74 trillion. From vibrant urban centers to dreamy coastal escapes, Mexico is transforming into a hotspot for both living and investing. Over 1 million Americans already call it home, and 500,000 plus own property here. The growth is fueled by tourism. In 2024 alone, 45 million international visitors flocked to Mexico, generating nearly $33 billion in revenue. Many came for vacation and stayed for the lifestyle. Moreover, Mexico's growing middle class, now nearly half of all households, is driving domestic demand for quality housing. Add in rising international confidence, and you've got a market that's hard to ignore. Recent changes in Mexican property laws have made it even easier for foreigners like Sami. In fact, thanks to a special system known as the fideicomiso, a sort of bank trust, international buyers can own property in those dreamy restricted coastal zones, and they keep all ownership rights. To top it off, Mexico offers accessible entry points. Property prices are still low compared to the US, Canada, or Europe, and favorable exchange rates make it even sweeter for dollar holders. Rental returns? Oh yes! In tourist hotspots, short-term rentals can yield 8 to 15% annually. That's not just a vacation home, it's a revenue stream. And the growth shows no sign of slowing down much. The residential market is projected to hit $17.78 billion by 2029, growing at a steady 4.14% per year. Before investing, Sami has to decide where she takes her cash. From turquoise beaches to buzzing cities, the real estate map in Mexico is bursting with exciting opportunities for every type of investor. Picture Playa del Carmen, Tulum, Cozumel, and Cancun. Not just paradise getaways, but investment hotspots. These areas are riding a wave of rapid appreciation, boosted by major infrastructure upgrades like the Maya train and new international airports. Meanwhile, up-and-coming gems such as Puerto Vallarta and Mérida let savvy investors dive in at affordable prices, with growth potential as shiny as a seashell on the sand. But maybe you love city lights, and the numbers there are just as bright. Mexico City, Guadalajara, and Monterrey are pulling in digital nomads, remote workers, and multinationals, driving prices and long-term rental yields up. In Monterrey alone, residential prices jumped 9.9% year over year by late 2024, while Guadalajara wasn't far behind with 8.3% growth. Over in Tijuana, property values sizzled with an eye-popping 12.8% annual surge, fueled by cross-border business and lifestyle seekers. Colonial cities like San Miguel de Allende and Mérida are winning over retirees and culture buffs, blending historical charm with modern living. Sami goes for the first option. She has just acquired a development in Tulum. Construction may take another 2 years to finish, but the yields promised by the development are mind-blowing. However, as Sami will soon discover, every paradise has its pitfalls.
Wait,
says Sami, reading through Mexican property laws.
We can't directly own land near the beach.
She looks concerned until their Mexican lawyer, Elena, explains with a smile.
You're right about the restricted zones, 50 kilometers from coastlines and 100 kilometers from borders, but don't worry. This is where the fideicomiso comes in.
Elena explains, drawing a simple diagram.
It's a bank trust that holds the title while giving you all ownership rights. It's renewable every 50 years and can be passed to your heirs.
For investors seeking multiple properties, Elena outlines another option.
A Mexican corporation can directly own property in these zones, perfect for those planning rental businesses.
Sami is surprised to learn about Mexico's property-friendly approach. In 2025, the government issued 120,000 new land titles, streamlining processes especially for foreigners. Property taxes are remarkably affordable, typically between 0.4% and 0.9% of cadastral value, much lower than the US average of 1.1%. Sami calculates her potential savings.
With property taxes around 3,800 pesos annually on a 2 million peso property and early payment discounts up to 25%, we'd pay less than $200 per year.
The Mexican sunshine suddenly feels even warmer. That's when her friend Miguel calls, a seasoned real estate investor.
Before you jump in,
Miguel cautions.
let me share some hard-earned wisdom about Mexican property investment.
Miguel explains the fideicomiso system in more detail.
It's not complicated once you understand it,
Miguel said,
but you absolutely need specialized legal help to navigate it properly. Many investors have lost money by skipping this step. The fideicomiso also carries annual trust fees to the Mexican bank acting as trustee.
Miguel added.
Plus, as a foreigner, you'll face tougher mortgage conditions and higher interest rates.
Miguel continues.
And don't forget that these markets can be volatile. When Hurricane Michael hit in 2019, it caused over $250 million in damage to Mexico Beach alone. Properties required significant repairs, and some areas saw flood zones rezoned, adding 5 to 10% to building costs.
What about ongoing expenses?
Sami asks.
That's crucial.
Miguel replies.
Coastal properties face harsh conditions: salt air, humidity, storms. Maintenance costs are substantially higher than inland properties. One investor I know spends triple on upkeep compared to his Arizona property.
Miguel explains how remote locations often mean higher costs for qualified contractors and services.
And don't forget, security concerns vary dramatically by location. Major tourist zones have better infrastructure, but you need boots-on-ground research. And before you dive in, a word of caution. Not all titles are created equal. Legal due diligence is crucial to verify clear ownership, prevent fraud, and ensure compliance with local laws. A trusted local attorney can help you navigate the paperwork and avoid costly surprises.
Sami looked thoughtfully at the property listing.
It still seems worth it, but I'll definitely do more homework first.
That's exactly right.
Miguel smiled.
Knowledge is your best protection. Also, to avoid unnecessary troubles down the road, there are a few strategies you can pursue. First, partner with experts, like assembling scouts who know the local terrain. Trusted, established, and bilingual real estate agents and legal advisors are your guides, ensuring every deal is airtight and every regulation is covered. Second, if you want peace of mind as an absentee owner, professional property management not only boosts rental income but also safeguards your interests. Next, let's diversify and build your portfolio. Smart investors spread their wealth across different assets: stocks, commodities, cash, and yes, real estate. Property can be a powerful part of your portfolio, but it shouldn't drain your entire savings. Finally, have an exit strategy and watch the trends. Keep an eye on infrastructure growth, digital nomads, and population shifts. These can signal rising property values. A smart exit plan means knowing when and how to sell for the best return.
Sami, our adventurous investor, stands on a sunny Mexican terrace, calculator in hand, ready to make her decision. Is Mexican real estate worth it? Let's sum up the journey. Mexico's real estate market is booming, fueled by strong demand, government support, and major infrastructure projects. Foreign investors benefit from favorable exchange rates and lower prices than in the US or Europe, with annual growth around 15%, and hot sectors like industrial, luxury, and tourism returns can be impressive. Risks, they exist, especially legal and regulatory complexities unique to Mexico, like the fideicomiso bank trust system for foreigners in restricted zones, or pitfalls from inadequate title checks. But with a reliable local lawyer and due diligence, most traps are entirely avoidable.
I get it now.
Sami says softly.
In a market like Mexico, no one makes it alone.
She's realized that success here means building a strong team. Local legal experts, architects who know the land, even trustable financial advisor for a secure deal.
If you're investing here,
She adds,
you need grit, flexibility, and a real appetite for risk. This isn't passive, it's a hands-on commitment. But if you're bold enough to try, it might just be the smartest move you ever make.